Yes, yes,
All
sir.
right. All right, great. Hey, everyone. Thanks again for attending today. This is Daston's first in a series of webinars. We're going to be discussing throughout this series, DCAA compliance and some of the specifics that are hot buttons or issues for GovCon clients. Today, what we're going to be discussing is what triggers a DCAA accounting system audit. Jen, if you can hop over to the first slide, what I want to do is let me tell you a little bit about myself. My name is Joe Alston. I'm the VP of Sales here at Daston. I've been working in the GovCon industry for close to 20 years. I've been at Daston for 6.5 to 7 of that. We here at Daston are very proud of the fact that, a lot of our team on the NetSuite side are all going to be GovCon. Today, our presenter is going to be Bryce Botaji. But Bryce he heads our DCAA NetSuite practice here. A lot of you, if you've been working with us, you've seen him on a lot of your calls. He's helping with the project management. Bryce has been in this industry for, I want to say like 15, 20 years. He's been in strictly GovCon for the last 10. He's been working with government contractors and accounting and compliance. Bryce's prior experience includes significant roles in the Big Four, where he was there and supported a long range of services for clients, including what we're talking about today, which would be those audits. Next page. A little bit about Daston. If you don't know, we've been in this GovCon space for over 15 years, helping organizations with implementations. I think we're well over 500 successful implementations now, and they range from GovCon to agencies there. When we look at our GovCon work specifically, we serve a wide array of clients, going from aerospace to manufacturing to technology to IT services. We've seen a lot of energy and resources lately with the big push on nuclear. And we tell you that to let you know that, regardless of what space you're in, we have people on our team that are able to service you. Our clients range from the, $5 to $10 million range, all the way up to multi-billion publicly traded organizations. We've been an Inc. 5000 awardee for the last 5 years running. We're also Google's Partner of the Year on our public sector side for the last 3. Without going too much further, let's hop into this. Let me go over to the agenda, give you an idea of what we're going to do today, and then I'm going to hand it over to Bryce. We've already done our introductions. So what we're going to do, what our plan is today is to give you an understanding of what triggers an accounting system audit, some of the common audit findings, the business impacts of failing an accounting system audit, as well as how Daston can help. And then afterwards, depending on how much time we have, we'll do a live Q&A and we can answer some of your questions. So with that said, let me introduce you to Bryce. Hey, Bryce, how you doing?
Thank you, Joe. Thank you. And thank you everyone for joining the call today or joining the webinar today. As Joe sort of mentioned, we wanted to put this together to kind of give you a little bit of background around, what to generally expect around a DCAA accounting system audit. But not just that, just kind of talking about some of the, what we've generally seen in terms of audit findings, and then really getting into, the impact of, failing an accounting system audit, right? I know there are probably going to be a lot of questions around that, seeing how that impacts each of your organizations. And then we'll close out, just showing, some of the premium support that we at Daston offer. Before getting into the next slide, as Joe sort of mentioned, to just kind of provide some additional color there, my background is in DCAA compliance. As Joe sort of said, some of the faces on the call or some of the names on the call are familiar. Some of the other names might have been prior to me joining Daston, but my background is around DCAA compliance, supporting accounting system assessments, understanding what those requirements are. And in my previous life, I sort of served in an audit lead capacity, helping companies get through these audits. So with that, we'll get into the first section, just kind of discussing the system triggers. So as reflected on the next slide here, there are a couple of different things. Yeah, there are a couple of different things that do trigger an accounting system audit, right? So number one is really just, anytime a company is new to flexibly priced contracts, meaning, at times you could be doing government contracting work, but you're really operating in a fixed price environment. But if but the minute where you start doing any sort of cost reimbursement work, whether it be cost plus, true cost plus contracts, or time and material contracts that might, where you're burdening your materials with your G&A rate, that essentially would trigger what they call a pre-award accounting system audit. The next one being, at times the government, the DCAA right now and the government in general is quite a bit backed up. So at times they don't have the possibility or the opportunity to actually trigger that pre-award accounting system audit. So meaning, you might be going through a proposal and you have one of these new awards and they're not able to actually trigger this pre-award accounting system audit. What then happens is almost immediately after you get the award and you start performing on the award, generally speaking, you're probably going to get a notification from DCAA or whatever agency you're doing work with, saying that your accounting system is going to be audited. The next section we'll talk about is something that's a bit different, although it doesn't relate to cost reimbursement contracts. It's more in a fixed price environment. These are very unique fixed price type contracts where the government is saying, we'll finance you. You might be working on a fixed price award instead of waiting until you have a deliverable to send an invoice to the government. The government is basically going to say, we're going to finance you, so that from a cash flow standpoint, you're not running into any issues there. So we'll finance you part of those payments, and the government does that financing based on the cost that you've incurred. So it kind of works like a traditional cost plus contract where, the government is saying, okay, we're going to finance you and we're doing it based on the cost that you've incurred. We need to be able to trust the data that's the accuracy of the data that's coming out of your system. And then finally, within this section, we're going to touch on just overall red flags that, basically, and other types of audits that generally trigger an accounting system audit, right? And what we mean by that is, the government can have an auditor coming into your company, for example, if you have to submit an incurred cost submission or any other type of audit. As they're going through the audit, if they identify a significant amount of issues, that might lead to a trust problem, and they might eventually say, we actually we feel like we cannot necessarily rely on the data that's coming out of your accounting system. So, they can actually contact the contracting officer to trigger an accounting system audit. So we'll talk about that as well at the end of this section. On the next slide, we actually get into the first scenario that I mentioned, which is basically, having a new flexibly priced contract. The thought process, the government's thought process here is, it's very different from your general fixed price awards. As when you're putting together a bid for a fixed price award, you sort of know what your you sort of know what your anticipated costs are going to be. The burden completely relies, the risk is completely on you or the contractor. So the government has less risk that is taken on. So in those particular cases, there's no incentive for the government to actually audit your accounting system. However, as you start moving from fixed price and moving on to as I mentioned, a time and material or cost plus contract, so most likely cost plus contracts, generally the government has, the risk then starts shifting to the government, right? Like, because now, for example, with a cost plus award, you're essentially telling the government, well, I'm going to bill you for the costs that I incurred, and you're going to pay me for all of those costs, and I'll tack on maybe a fee on top of that for my profit. So at that point, obviously, the government has more of an incentive to want to audit your system. So generally, this actually happens all the way from the award phase, right? When as soon as there's a proposal that's out, and you bid on these type of awards, as you're bidding on the awards, you have to be able to show the government that you have a system in place that has the ability to do job costing, and so that the government knows that they can essentially rely on your costs, the actual costs that would be incurred. Moving on to the next slide, as we mentioned earlier in the summary slide, there are instances where the government does not have the ability to do that. Sometimes, from the time a solicitation comes out to the award phase, the timeline can be very slim. So then in that instance, the government might say, might actually have you like the contracting officer might have you subject to an audit right after the award is has been awarded. And in that case, it's no longer a pre-award accounting system. It then becomes a post-award accounting system audit, right? And for the folks on the call, by the way, who sort of don't necessarily understand the difference between both, with a pre-award accounting system, the government is really just looking to understand the design of the system, right? Like how the system is actually designed, versus post-award. At this point, the government, knows the award is already ongoing. So they're now more so looking to see operationally, from an operational standpoint, how is the system actually functioning? So at that point, with a post-award accounting system audit, you're subject to a lot more requirements. The scope is much, much broader. And then it takes us to the next slide, which is, as we mentioned, the contracts that allow for progress payments. As mentioned earlier, although these are fixed price awards, the only difference is, the government is basically advancing you some sort of, it's sort of like a financing arrangement where the government is saying, and this generally applies to small businesses. The government is basically saying, for example, okay, you're a small business, we know cash flow might be sort of a challenge, so we're going to finance you in advance for your costs that you've incurred on the contract, and then at the end, eventually that's going to be trued up, and you'll be paid the remaining balance once you submit a deliverable. And then finally, we then get into the other types of audits. So I'll take an example here. Say, for instance, your company's submits an incurred cost submission, and you're subject as the auditor is going through your incurred cost submission, maybe they go through your indirect schedules, they start noticing a significant amount of unallowable expenses. That's one example. Or say maybe when they're auditing your Schedule H, which is supposed to show your direct costs, and then the indirect burdens applied on top of it. As they look, if they audit those direct costs and maybe see that there's some sort of indirect expenses there, then the auditor might then say, we have an issue trusting the data that's coming out of your system. For example, your unallowable costs, clearly maybe your system doesn't have the ability to segregate those unallowable costs, or even from a direct cost standpoint, maybe your system is not truly segregating your direct costs from your indirect costs. So that can essentially eventually trigger the auditor to reach out to your contracting officer, who would basically have you subject you to an accounting system audit. That essentially closes out this that section. And then we want to get into general common audit findings that we typically see during these audits. We'll discuss timekeeping controls, which is probably like the one of the huge ones that they're generally seen during these audits. And then secondly, really just a lack of documented policies and procedures. Most people are under the impression that it's when you're going through an accounting system audit, is just about the system's design, but there's an expectation that there should be policies and procedures that document your various processes around the system. And then we'll talk about just inconsistent cost allocation practices that generally are seen during these audits. And then the last two being just overall manual audit processes, without clear audit trails. And then really just the lack of required reporting controls. Starting with weak timekeeping controls. Again, as mentioned, timekeeping is probably the biggest finding that generally arises during accounting system audits, because it's, although you would think it's probably the easiest ones to sort of or the easiest controls to sort of implement, that most companies generally have an issue with this. Number one, just being employees who are not recording their time at the end of the day. A lot of employees with government contractors do tend to wait until the end of the week to enter their time. But during whether it be a flaw check or during an accounting system audit, this is something that they're generally looking for. The next one really just being um, um, changes that are occurring on their timesheet. So you have employees who might enter their time, but not necessarily if they come back to make any edits to those timesheets, they don't include comments to include the reasoning behind the timesheet changes. And then finally, it's really just having certain employees who charge time to incorrect projects. And that's very frequent in the event in instances where you might have an employee who might be assigned to several different charge codes. Who might be assigned several different charge codes. They might be spend most of their time working on a direct billable project. But in those instances where they have downtime and they're supposed to charge maybe a G&A code or an overhead code, they forget to do that. And generally we see that when employees, it kind of takes us back to point one, where employees wait until the end of the week, they cannot necessarily remember what they worked on, right? So it kind of takes us back to the point of the best practice is for employees to generally enter their time at the end of the day, because the expectation is they'll be able to remember what they actually worked on. On the next slide, as mentioned, is really just the findings that generally occur around missing policies and procedures. And there are actually two items. At times, it's really just the lack of any sort of policies in place. And then at times you have, some companies who might have policies in place, but they don't necessarily have, like the policies are outdated, right? Whether it be, there were changes to our processes, maybe the accounting, I'll take an example, the accounting function sort of changed, like, the reporting hierarchy sort of changed, and, those policies need to be updated to sort of show the different users involved throughout the process. So, at times when DCAA comes in for an audit, between what they see in the system or what they see on the documentation required is very different from what they see in the policies or the walkthroughs. On the next slide, we then discuss, really just inconsistencies around cost allocation practices. The main one really just being, certain times when the people who are the employees who are entering data into the system might be charging costs direct at times and indirect at other times. And so for example, if an auditor was to come in and say for example, request your statement of indirect costs, if in a particular month they're seeing that the costs that are going into the statement are very different than what they might see, like in January, from what they might see in, say, March or April, although the costs are similar in nature, they would then start questioning your charging practices. And then we get into the next one, which is really just the lack of and if we go back to the last slide. Oh, sorry, the next slide. Yeah, so the lack of an audit trail just around certain manual audit processes. There's certain processes, and generally we generally see this around journal entries, which might be not necessarily entered into the system and maybe prepared in Excel without the proper review the proper review and approvals taking place to be able to enter it back into the system. And this is also very frequent, especially around provisional billing rates that are maybe being done or prepared outside of the system, and it's not really documented back into the system. And then finally, in this section, we talk about in this section, we talk about, just the lack of required reporting controls. And this is more, when part of the accounting system criteria does require there to be very strict reporting controls in place, management approvals and, those and reviews happening to ensure that the financial reports are accurate. So generally what we see during accounting system audits is, you would have instances where, maybe the reports that are out of the system might be inaccurate, basically because, there weren't any reviews, right, essentially happening when they should have been happening. This then takes us to the next section, which, here we're going to just discuss the impacts of failing an accounting system audit. As I mentioned, I think for most of the folks on the call, this is, this might, really generate your interest because you want to sort of know, if you're going through an audit, what can result from that, right, if a finding comes up. And there are really four main things that can generally result from a finding. The number one is really just the administrative burden, right, of documenting corrective action plans. Secondly, payment withhold. So if you have a lot of findings resulting from your accounting system audit, the government can actually decide to withhold payments on your invoices. And then thirdly, is really just reputational damage. I think this one is, although it's one of those that's sort of unspoken, but if there tend to be a lot of findings, a lot of question calls resulting from the data that's coming from the system, then there sort of starts being trust issues, right? Then your contracting officer or any future work then comes into scrutiny because then there's that question of, can we actually trust the data that comes from the system, whether it be for proposals, whether it be for follow-on work, so that's one of the items that is generally not discussed enough. And then finally, which, it takes quite a bit for it to get to this point, but it can actually result to loss of contracts, loss of the inability to bid on cost reimbursement work. This kind of takes us back to the beginning where I said, the idea behind the accounting system audits is, the government has to be able to, since you're billing the government based on the cost that you incurred on the contract, the government has to be able to trust and rely on the accuracy of that data that's coming out of your system. So we'll first just discuss these corrective action plans. The main challenge around corrective action plans, I'll actually say, is really just the burden of putting these together, as well as really just having, there's even a financial impact when you really think about it, right? Because the corrective action plans are very tedious in nature. As reflected on the slide here, there are a couple of items that need to be addressed by these corrective action plans, but they need to be done accurately. They need to be done properly for the government auditor to be able to rely on those. And really, for the folks on the call who are not necessarily familiar with these, the corrective action plan is basically a plan telling the government, okay, you identified a finding, but us as an organization, we're going to work to address that finding. Generally, the government is always going to give you the opportunity to address the finding. So you document, you put together a plan in place that says, that clearly lists out what the issue was, and it assigns accountability to who's going to be responsible for addressing this issue with a clear, thought out plan on how the issue would be addressed as well as monitored. That's really all it is that you're providing the government. The second item, as we discussed here on the next slide, is really just the payment withholds. So generally, there are a couple of scenarios that can really trigger these payment withholds. And again, as I mentioned, once there starts being a repeated pattern of findings, then at some point the government can actually get to the point of saying, okay, we're just going to withhold some of your payments on your invoices. And this generally happens specifically around the inadequate segregation of direct and indirect costs, right? Like, for example, if looking at your invoices, you're charging certain costs direct that should have been indirect, or vice versa, then it essentially tells the government that you could be submitting inaccurate invoices, which is could be a huge issue. The third item, as I mentioned, is really around that reputational damage. As I mentioned earlier, it's one of those things that's unspoken, but I've seen plenty of instances in the past where you have a company that might have been doing work on a particular contract, and that they go through an accounting system audit, and they have the result is a ton of findings. They put together corrective action plans, but they don't actually, those corrective action plans don't necessarily in practice and not operating effectively. And essentially at some point, they just have a challenge winning additional work because that reputation or the trust has been sort of damaged. And then finally, as I mentioned, generally for it to get to this point, I mean, it's very rare, but it's possible. So if throughout the course of an audit, the system is deemed inadequate, obviously, as mentioned earlier, the first course of action will be the government giving you the opportunity to submit the corrective action plan. If with that corrective action plan, the government realizes, you're still, the findings still hasn't been addressed, there will be additional opportunities. But if regardless of the opportunities that are given to you as a company, if the government realizes that there's just not, there's not a plan in place to be able to address it, then, then at some point you're just no longer going to be able to bid on these type of contracts. So the next section, which is, I would say, probably the most important is, we want to clearly list, well, first I highlight the fact that, internally, Daston does provide support around this. This support is the premium support that's separate from the implementation support that we generally provide. But this support is strictly geared towards sort of helping you address any accounting system issues that you may have, or just kind of preparing for an audit in general. And in this section, we're going to discuss the four main areas where we provide our support. Number one is training. Number two is really just documentation, supporting you with policies and procedures. Number three is readiness assessments. This is basically, if you get a notification, or if we know that you're going to be up for an audit, and which are several ways to kind of know if you're going to be up for an audit or not. But if we know you're up for an audit, there's several items, there's several things which we'll talk about in a subsequent slide that we can provide assistance. And then finally, we'll discuss, some of the actual audit support that we can provide when you're going through an audit. On the next slide here, we start with just training. And this training is really just technical training. It's unrelated to the implementation training courses that, for most of the folks on the call you took. This is more technical training geared towards overall government contracting, right? Think of your government contracting 101 courses, which is, we provide training around, what's allowable versus unallowable costs per the FAR Part 31. We go into more depth around indirect rates, understanding that for a lot of people, they're new to, for a lot of you might be new to government contracting. So we provide, really just a lot, an in-depth training around indirect rates. And then, we kind of help you understand how to prepare for an incurred cost submission. Obviously, the Daston tool has KPIs that provide incurred cost submission reporting, but the actual preparation, right? Like some of the documentation that you need to prepare for in the event you were up for an audit, for example. Another thing we discuss how we help you understand how to manage your provisional billing rates, during your month-end closing process, monitoring your provisional versus your actuals and understanding how that works, as well as really just, some of the other financial basics around government contracting 101. On the next slide, we then get into, the policies and procedures development. As I mentioned earlier, the accounting system audits don't just focus on the design. It also focuses on having the documentation in place. And some of the key policies are the ones we have listed on the slide here. So number one is really the allocation of indirect expenses. There's an expectation to have policies around direct versus indirect costs. the policies around the segregation of unallowable costs, the accumulation of direct costs by contract, the policy around timekeeping and your labor distribution, as well as subcontractor costs and invoicing. So Daston does support, can support your company with each of these policies. Then on the next slide, we discuss really as part of our readiness assessment, again, as I mentioned, this is to kind of help you in the event that you were subject to an audit. We help you, for some companies, you might say, okay, we have policies in place, but we want to just kind of get a second set of eyes to evaluate that those policies are the existing policies we have in place appropriate for government contracting purposes. We can support that. We can support you as well as which reviewing your billing processes, your contract setup processes, just to make sure that it's working appropriately. And we can also support you around, documentation of any findings and corrective actions. So, as we're going through a readiness assessment and as we do these evaluations, if we realize, or if we deem anything if we realize that there are any sort of issues, we can kind of help you address that or remediate those issues firsthand. And then finally, as I mentioned earlier, is really just the support we provide around the actual audits. So if you were to get a notification saying you're up for an audit, the government will go through the process. You'll have an entrance conference, and as the government is doing or the auditors are doing their field work and they're doing walkthroughs and those sort of things, if you need support around preparing for the walkthroughs, we provide that sort of support. If it's even documentation, right? At times when DCAA comes in, part of what they're looking for is, number one, their walkthroughs. Number two, they might be asking for particular documentation. The key generally with DCAA is to make sure you don't give more than they ask for, right? So, with our experience, we're able to provide sort of support based on what we've seen in the past, what's acceptable documentation. We try to limit the documentation we want to provide to them. So we sort of help you around that, as well as even corrective action plan developments, the corrective action plans that I mentioned earlier. So, in the event you were to have a finding, we go through the process of actually documenting the process of how we would draft the corrective action plan. And that essentially takes us to the end of our webinar here today. I know that was a bit rushed, but given that we understand that we only had about 30 minutes, we wanted to give a few minutes at the end to kind of open the floor for any questions that anyone on the call may have. Yes, please. Thank you, Jen. Yeah, if for the folks on the call, if you do have any questions, feel free to drop them there.
Great. Well, while Jen's getting the Q&A together, we just want to let you know that this is the first part of a series of webinars that we're planning. Our next one is a deeper dive into DCAA compliance and the same topic of audits. And it's going to be August 5th at 11 o'clock. We may actually make it a little bit longer than this one, but think of it as a deeper dive, more technical than what we talked about today. Jen,
Yeah.
did you have any questions? I know we're running a little late, so thanks everyone for your patience.
So we do have one question: is how do I know my company is up for an audit?
Yeah, sure. That's a great question. So generally you will get a notification. At times it might be a contracting officer who might reach out and say, you based on some of the documentation they'll start requesting, you get a sense of if you're coming up for an audit. And then also the audit team, so like the DCAA audit team will actually reach out prior to them coming on site, letting you know your company is going to be up for an audit.
Not sure you can see the other question that popped up. Is the system audit a one-time occurrence, or is it reoccurring? If so, how often?
Yes, that's another very good question. So it's definitely not, it's not a one-time occurrence. Generally DCAA, I mean the government tries to audit your system about every 3 years. Um, over the past couple of years, there's been some bandwidth issues where they're not able, it might drag into 4 or 5 years, but for your accounting systems, generally it happens about every series of 3 years.
Awesome.
All right.
All
Well,
right.
thanks again, everyone, for joining us today. My apologies for us running a little bit over. Like I said, we will be doing another one of these. I expect a notice of that for August 5th. We'll also be sending out videos, a copy of this webinar to whoever's interested. If you have any questions, please feel free to reach out to Bryce or myself. And with that, thank you and good night. Well, good day.
Thank you, everyone.
There you go.